Recording in progress.
Happy Wednesday. Welcome to another edition of Ninjacators' new weekly live event called Profits at Noon. Welcome everyone, Eugene, Hal, Richard, Walter. It's great to see you guys. Kevin, welcome. We've opened up the room just a minute early to get everyone in here, get a chance to settle in, find a good seat. Welcome, Daniel, Frank, Hal, Theo.
How's it, everyone? How's it going? A lot of new names, yeah?
Yeah, we got a great
Growing.
crew coming together.
Nice.
Very cool. We're going to get started in just a second here, guys and gals. Good
Hey,
evening to
Frank.
you, Frank. Awesome. I love my punctual crowd, some familiar faces, as well as some new names. We love to see it. So welcome
Hi, Hal.
everybody to the Wednesday edition of Profits at Noon. Hello, Hal. As you can see, King Richard is back in the house. He is with us today.
I
Got
don't
some
feel like King Richard, that's for sure.
We'll get you back in the king's robes in no time,
Thanks.
sir.
Thank you.
Walter, good morning from Vegas, baby.
Hey, Walter.
Awesome. So we're at noon Eastern on the hour here, which, as you know, being part of the name of this show, is indicative of us starting around this time. So we have a good crew coming together. I'm going to go ahead and kick things off here for today's session. My name is Nate, co-hosting these events with our very own Richard Krugel, who is back in the house. This is Ninjacators' new weekly live event. We are going live Monday, Wednesday, and Thursdays at noon Eastern time. So in addition to all the cool analysis you're about to see, the 6 futures markets that Richard is covering, we also provide what we call our levels to lock. So you'll be steered clear of any surprises, any market traps, news bombs that could be waiting, and you'll get to see all of this analysis play out in real time with us. So, of course, we do encourage you to attend the follow-up sessions. We will be live again tomorrow, Thursday at noon Eastern, and I do want to quickly mention we have a brand new special guest coming tomorrow, one Will Busby of Pure Financial Academy. So he has some cool stuff to show us tomorrow, so be sure to stick around and make that session as well. He's going to be doing some live supply and demand analysis on the ES. So again, tomorrow our special guest Will Busby will be joining for that. So definitely join us for that session. But today it's just myself and Richard. So we're going to go ahead and just funnel right on into the analysis portion of today's session. We'll make some room for Q&A towards the end of this. And so if you have any questions throughout this presentation, if you see anything on Richard's charts, please feel free to fire away here in the chat. We'll make sure everybody is taken care of and those questions are addressed in the order that we receive them. So now, without further ado, I'm going to bring Richard in to kick off the analysis and those levels to lock, and I'll check in with you guys towards the end of the session. Richard, to you, sir.
Thanks very much, Nate, and welcome everyone. Nice to see all the familiar faces or names, and as well as the new ones. Do apologize I couldn't make it on Monday. I've been pretty knocked out, I would say, by some flu, whatever the case might be, since Saturday. Feeling a little bit better today, so if I do, I almost said smell, sound a little bit muffled, but then I do apologize, but I still got a bit of congestion going on here. But anyway, nice being with you guys here today. As always, before we do get started with today's session, just a quick note that all information is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or Forex. All right, I'm just going to disappear off screen here for a little while I do the analysis. Again, we're going to go through the ES, the NQ, the YM, the Russell Gold, crude, and crude oil. We're going to talk about our levels to lock, which is still going to be way more useful when we actually get that newsletter going. I'm going to be mentioning them here during today's session as well. Also perform a little bit of market geometry, one of my favorite analysis techniques, sort of in a bigger picture, which are all these lines you're seeing here. For those that's been trading for a while will probably recognize that they are pitchforks. So I do look a little bit at price action, price structure, where price is in relation with these pitchforks, where I think I'm dealing with corrections. So also looking a little bit at the bigger picture sort of thing. And then for those that are intraday traders, obviously these levels to locks are really great to look at for intraday trading and stuff as well. Again, be way more useful once we actually have the levels to lock newsletter ready, but we're still working on that. In any case, quick, on the ES, we've seen recently here when was it sort of mid of this month already, price making a low, right? And I've been saying that I'm either seeing this move to the upside now as, I should actually hide these, forget that they're there, sorry, as a leading diagonal, i.e. that this was some sort of a very important low, and that whatever we're seeing here might be a build up to a leading diagonal that's still not completed yet. All right, that still needs to break this high. And a 5-wave move with combinations of 3 waves in between. 3 waves in between. All right. So if price were to break these highs, I think that does become a probability. It's something we've been looking at for a while now. So if you've attended one of those previous sessions, then I've been mentioning that that could be a possibility. Now, what that means is if you see a 5-wave sequence build up, there are different ways it can happen. Leading diagonals, like nice impulsive sort of looking waves, which this doesn't. It looks very overlapping, if that makes sense. So we get another wave that breaks above these highs that were set last week. Then we can expect a corrective move low, and then we could potentially have a nice strong wave back up again. All right. So that is certainly one way to look at it. I also see, when was this? When we actually had Tony from Trader Smarts on as one of our guests a while ago. We were looking at typically what I like to do with my pitchforks. I have pitchforks that slope in the direction of a trend, in this case downwards. And then also when you see a move opposite the trend or counter trend, you either see that as potentially corrective in nature and then slope a pitchfork in the direction of that move. And then where they typically have a cross from a higher time frame pitchfork and a pitchfork that's been drawn from, let's say, a lesser degree time back in history, like this one, for example, you quite often where you have confluence is where you get reversals lower. All right. Okay, that's just a quick recap of what happened over there. We can see that this high, yes, last week actually tested this pitchfork line again, this one to the upside. We had a strong move down to the downside again. And I was still saying that if price would find support and break a new high, we're dealing with that leading diagonal. That is still my favorite, can I say, bias at the moment. Now, those of you that are, this is why I actually got this WXY drawn in here, familiar with corrective patterns. Your most common corrective patterns, what people would call a zigzag, ABCs, for example. And then you get combinations of that where you get an ABC, get one wave down, and you get another ABC. Now that's called a double zigzag. This is what I think could have been a double, well, I'm not thinking this. I'm actually going to talk about this in a little bit more detail for you guys. One of the biggest sort of analysis companies out there that deal with Elliott Wave, I'm not going to call their name, normally have a free pass once a year. Now, for me personally, they're extremely bearish or very negative most of the time. They have got this wave to the upside labeled as a WXY, meaning that they potentially we've seen a W, oops, an X, and some extended Y here, meaning that a double zigzag and that this is actually corrective in nature, not a leading diagonal. John, yeah, we can remove that pitchfork, that's for sure. I'm just keeping it on there for quite a few times when you actually have a pitchfork that price, how can I say, breaks the boundaries of it. You quite often see price pull back into it. We have resistance here, we have resistance here, resistance. You know, maybe it acts as resistance again. It's just keeping it there for a little bit of recap for most of you guys. And quite often, even if you do not get rid of it and you copy and paste them, I don't know if this one's actually going to work. Look what happens if we do this. Support, 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 support. All right. So that's one of the reasons I'm keeping it on there. It's amazing how you can take 3 points on a chart and you quite often see how these angles still work way into the future. All right. So what I'm trying to get at here is that this very, like I say, big company It's actually calling this at the end of a correction. Now, I have to say that there is some sort of validity to this. I'm still not 100% sure that it is, just because price came, well, excruciating close to these highs set last week. But that being said, let's entertain the idea that this was a double zigzag. All right, let's get rid of that. And it already ended. Okay, then that would mean that price should not break this high, because if it does, it invalidates that idea of this double zigzag. And it's still, you know, I'm still obviously working as my main idea that we're dealing with a leading diagonal. But let's say for some reason this week or next week we start seeing one hell of a decline here, without price breaking this high at what was that high anyway? 407.375, 3/4. And we see one hell of a decline here, then that would mean, obviously, that that idea is correct. Now, if that idea is correct, then that would also mean that price is going to head lower and break this lows that was set in, when was it set? 13th of this month, which in the bigger picture could actually be way more bearish than originally anticipated. What I mean by that is, I'm not trying to obviously scare anyone here, but you always got to sort of see in the bigger picture what your plan A, B, and sometimes a plan C might be. Is that since this high in 2021, on the 28th of, when was this? The 4th of Jan 2022, last year, is that this would potentially could have been a leading diagonal 1, a 2, a 3, a 4, and a 5, and that this was corrective. And what we're seeing here now that we've been tracking on the smaller scale, i.e. this move, this one, hopefully that's clear, is this one we're looking at here, was potentially the start of a new move to the downside. Now, what this other guys are also saying is that this was a wave 1 that formed as a leading diagonal. Wave 2 ended, and that this was the first wave of the third wave. We're going to start seeing this happen. Now, like I said, it's going to be pretty bad if that does happen. It's not impossible, because if this is a wave 1 and this was a wave 2, and we do start seeing a wave 3 materialize, then we could probably see prices on the ES even halve itself from where it currently is. I mean, it could easily go to 161.8, around 2,200 or even lower. But I mean, that mean all hell's probably going to break loose. So just keeping that in the back of my mind. Learned myself from my own experience, should I say, that I should take some of these big companies that really charges you an arm and a leg to do Elliott wave analysis. They work with a bit of a pinch of salt, especially if they're pro-bearish most of the time. But that being said, there is some validity to this count, and I definitely think that that could be a possibility. But I think the best thing we do for now is obviously just concentrate on the intraday levels, our levels to lock, and an overall picture just to bring everyone up to speed. I know there's been quite a lot of explanation what's going on here, but I just wanted to get us all on the same page here, that if price does break this previous high here, then I'm seeing this still as a leading diagonal. So i.e. that I'm actually bullish rather than being bearish. Okay. Unless we start seeing a price move, break a high here, and then this double zigzag turns into a triple zigzag instead, which is what we've seen happen on crude oil before. All right. Now, I know this is obviously a completely different market, but if you guys were following the profits at noon for quite a while, then you would have seen that I was saying that crude oil was correcting higher where I thought it was. Couldn't say that 100% for sure. It was also making these 3-wave sequences, you see. And this would be the WXY on the ES that we might mention here. You get fooled. We see another will move to the upside. You could potentially then see that as a leading diagonal. And then somehow you get one hell of a crash. It's all about watching price action and how it reacts when it does make a new high. We could then potentially get another 3-wave move, which is potentially what we're seeing here. And then get one hell of a crash. So either way, whether this is a leading diagonal, whether it's corrective, whatever the case might be, expecting that whenever this high is broken, could be corrective or leading diagonal, that we could potentially see a correction afterwards. All right, so I know it's a long-winded sort of explanation of where I'm seeing things currently. Price pulled back to the 50% retracement from this high that was set in beginning of Feb. We might see if price then breaks that high, an extension to 61.8. All right. And maybe a retest of this line, John, that I kept on the chart there, which has been acting as resistance so many times over and over and over again. But again, let's see what happens. For the time being, let's quickly talk about the levels to lock before we move on to the other markets. There's no real massive major news events scheduled for the rest of this week. I think tomorrow we got the final GDP quarter-on-quarter, and then we have the core PCE price index figures month-on-month on Friday. So I think most of the big news, obviously to do with interest rates or all that sort of stuff, already hit the markets. We first had a negative reaction to it, and then obviously a bounce back to the upside again. But keeping in mind the bigger picture, I still think this high is potentially going to be broken. Price opened today above today's pivot point of 4,367. My sort of idea was that we could reach R1 at 4,026. That's happened, and this is probably how the levels to lock is going to work. I quite often look at previous days' highs and lows, where price closes in relations with these levels to lock, which again, you'll know about half an hour before the stock market actually opens, when the newsletter comes out. And then my game plan for a day, quite often you see prices drawn towards these pivot points, in this case, R2, which has already been hit at 4,046 and what's it, 3/4. And then we also have a proprietary indicator here that works with previous days volatility, which we call our projected ranges, and the standard deviations of them to the upside. Quite often these also act as support resistance, or sort of like a drawing or magnet where prices, get drawn towards. So I'm not going to go into too much of that again today. All of this would make way more sense in the game plan for what we're seeing on the intraday sort of game plan when that levels to lock newsletter comes out. All right, so long story short, sorry for boring you if I've been hammering on about this, but very important for me to sort of bring you up to speed what I'm seeing in the bigger picture here on the ES and what potentially could happen on either the bullish or the bearish side of things. All right, NQ opened right at today's pivot point. Didn't actually reach it, about 12,738. No issue reaching R1 at 12,842, and just fell short of R2 at 12,937. Could potentially still reach that. And same thing I'm seeing here on the NQ, potentially heading towards those highs that were set last week. Right, it brings me to the YM. YM, messy. I mean, good luck trading this as a swing trader. Very, very messy. Up, down, up, down, up, down, up, down. Is this corrective in nature? Certainly here on the YM, it doesn't look like it's some sort of start of a new trending market, does it? Which also makes me a little bit worried. Price structure looking quite a little bit different here on the YM than the ES. Yes, they're different markets. They look at different sort of the stocks that make up those indexes and so forth. But, quite often you do see some sort of similarity from a trending perspective. But once you start seeing sort of similarity between corrective structures, that is a little bit worrying. So again, mostly looking at what the ES is looking like and having that game plan to go with, whatever your favorite market is. If the ES is going to start crashing or spiking higher, the NQ and the YM is going to follow in any case. So price here also open above today's pivot point, moved towards R1, just fell short of R2. Sort of been testing it now a little bit again. Actually went below it on the current 4-hour and pulling all the way back up again. Could potentially still reach R2 today at 32,925. Again, I mostly look at the ES and the NQ for direction. The YM still, for me, very, very crazy price action. Very messy indeed. Same thing here with the Russell. Also been sort of stuck in a very messy range. It did break out last week, which we were mentioning, that could be then the start of a new move to the downside. Price found support, boom, straight back to the upside again. So also very, very messy price action. Again, similar thing here. This doesn't really look like a start of a new trend to the upside, does it? So that's what worries me. Obviously, the Russell, I'm not too worried about. It's mostly the similarities between the YM, the NQ, and the ES. But from a Russell's perspective, still looking really, really weak over there. Gold, on the other hand, as we all know, has enjoyed a really nice, strong spike to the upside. And John, this is also one of those situations where I don't know if I showed you this last week, but sloped a standard pitchfork in the direction of gold. I think we've done this. When was this? Before the 15th of March. I've marked this little area here where price actually reached an upper red warning line of this pitchfork. And we only got a very small reaction to the downside. And then price broke above it. Again, just using the three most prominent anchor points prior to this move to the upside, although price broke out of the boundaries of this pitchfork. What happens if you copy and paste this and place it to the upside? Resistance. Now, obviously, you've got to look at pattern analysis, potentially wave analysis if you're in that sort of thing. But whatever the case is in the bigger picture, we did find resistance there. Price moved lower, back into resistance. You see how it's still respecting the same angular support and resistance lines from these pitchforks. All right. Now, quite often where we then see projected ranges or levels to lock, where we have confluence between those, we can then sort of to a very high degree see whether we're going to have high probability, I would say reversals, but support and resistance levels step in. Right, you can see how beautifully price has been riding this median line. Moved all the way back up there again, and it's gone down again. Now, two things here on gold. I still think that gold can move lower. And there's sort of two different patterns that I'm looking at here that if this is corrective, i.e. that we've got some sort of, I don't know, a B, maybe a running C, and that's it, and price is going to move higher, or you just get rid of that magnet mode. Something that's looking, popping out at me at the moment is potentially this A, B, C, D, E. And then maybe a move to the upside. All right. Now, quite often there's relationships between these waves and the internal waves of triangles. See this low over here. Resistance or support at 78.6. If we have to go from this high to this low, we just get rid of that line, see where that is exactly. Oops. Beautifully, 78.6. So if this is a triangle, we might see another move lower. Now watch out if we do find support again at 78.6. That is if this is high without price making a new high, right? Or even the 61.8. And where that is in conjunction with a market geometry line could potentially be where an E wave ends and then another wave to the upside follows. Not saying this is a triangle, but it's certainly starting to look like it's narrowing towards a fine ending point towards the end here on the right-hand side, or narrow point, if that makes sense. All right. Alternatively, still correcting, but for me in the bigger picture, and I mean bigger picture, we'll go back quite a while here. I actually want to go back all the way to, when was this? September last year. We potentially had a 1, a 2, a 3, a 4, and this is potentially still a fifth wave moving to the upside, or we had a 1, a 2. Let me just mark that up for you. A 1, a 2, a 3, now potentially a triangle, another move to the upside, and then we get a larger correction to the outside. So I'm bullish. It's pretty much what I'm saying on gold. Just still think we're in the midst of a correction here. This doesn't look like a single zigzag because this low didn't break this previous low, but we do sometimes get those zigzags where, let's say, you build into a high, and then you get an A, a B, a C that doesn't break below that wave, and then you see a move to the upside. That also happens. For me, they're quite they're almost impossible to sort of read, you know, because they just happen out in the middle of nowhere, because normally the C waves carries below or actually falls in line with your end of your A wave. But this sort of behavior that we're seeing with these Fibonacci relationships between these waves could potentially mean that we're dealing with a triangle. So we'll recap things again tomorrow with all these markets for that matter. And maybe if you do start seeing gold move low without breaking new highs, I mean new highs, today's highs, and these highs set last week, then I think we could start looking at potentially areas where an E wave might potentially end. And then meaning that we could then be dealing with high probability. I wouldn't say high probability, but it becomes a high probability when you assume you might be dealing with an E wave. Because in my opinion, you don't really know you're dealing with a triangle until you got an area that you identified beforehand where an E wave might end. And then if you then see a strong reaction from there, only then you got high probability. So if we do start seeing that, then I'll see if we can turn bullish. And again, we'll also look at our levels to lock again and potentially see if we can set targets or projections much higher up that would at least break these highs that were set on the 20th of this month. Okay. Crude oil. Crude oil, I've talked about this pattern. I made some comparisons in the structure of this pattern to what potentially could also be explain what the ES is doing, but let's forget about that for just a little while. I've been saying that this potentially here is also corrective in nature, meaning that I still think crude oil can move lower and that whatever's happening here is potentially just correction. Now, interestingly, if we look at this previous correction, so correction to a previous low before the strong bounce to the upside, price has not reached 61.8 just yet. So there's a probability that we could potentially still see price move up there. It doesn't have to. It really touched R1 today at 74.28. We'll have to see where, if price finds support here. If price starts moving higher, we got that 61.8 around 74.70. And tomorrow we'll see where the other pivot points are. If we do get a reversal back into that, we're going to keep a very, very close lookout or watchful eye at those levels, which I'll fine tune tomorrow for the potential end of a correction. Now, obviously, we don't just call end of corrections, but, you know, in the bigger picture, crude oil is pretty bearish, in my opinion. I think, was it last week? Or actually, about a month ago, I started showing you the bigger picture in crude oil as well. And our price finally broke below this low median line. Now, I was saying that if we see a pullback into it, we might get a strong resistance and then a continuation to the downside. But quite often with market geometry, as well as if you do get an overshoot or undershoot of an area, you just draw a line parallel to one of your median lines, and you can project it at a previous levels where price sort of missed those lines, if it makes sense. And you can see we had support. Very messy and very difficult. It's not a science, 100% exact science here. But we can see that price pulled back into that line over there again. Same angle. And then also thinking that this might be corrective. Maybe it was just an ABC that's either completed or might just want to make one more high. And then that could potentially be it for crude oil, and we see another move lower. Alternatively, I'm completely wrong. We see a very strong move back to the upside, and we'll obviously just have to rework things and start thinking what the other pattern might suggest. But again, not to bore you too much here, I still think crude oil is just correcting higher, and that this, could potentially be very close to ending the correction. whether it hits at 61.8 or actually reaches this upper median line yet, we'll just have to wait and see. All right, guys, that concludes today's session. Thanks for attending. If you've got any questions regarding the analysis today, then please let me know. Again, I do apologize if I sound a little bit off today, but my head feels like it wants to explode, actually. But I try my best.
Thank you so much, Richard, and we appreciate you being here in spite of the illness. No, we really appreciate it. As always, great analysis, very insightful. We actually, if you were with us on Monday, Kyle and Craig were both with us. We had a request to take a look at gold. So I recommended a few people watch our last session with Richard prior to that and also join the session today, just because Craig and Kyle had some short-term insights. And then Richard, of course, the king of the long-term, in my opinion, as far as getting that complete picture of what could be coming next there. So thank you so much, Richard, again.
You're welcome.
Great to have you back. Looks like Frank is also sending some thanks your way.
Plezier, Frank.
Excellent. Well, we'll probably go ahead and wrap today's session just a few minutes earlier. We don't have a guest for you on deck today. And as mentioned, Richard is still a little under the weather, but he was able to power through and get this done for us today. So we're very appreciative. But if you had any questions for Richard before we go, please feel free to fire away in the chat and we'll take care of that before we go. Thank you, Hal. And Hal sends his praises to you, Richard. So thank you again.
Awesome. Thanks, guys.
Very cool. Well, we encourage you, of course, to come back tomorrow. The next session of Profits at Noon will be tomorrow at noon Eastern time. Of course, we will go through all 6 of these markets again. Richard will have some updated levels for you guys to watch. And of course, as I mentioned earlier in this session, we do have a special guest on deck for you tomorrow, one Will Busby of Pure Financial Academy. So feel free to check out his website. In the meantime, it's just purefinancialacademy.com if you're not already familiar with him. But he is going to be doing live supply and demand analysis on the ES tomorrow as soon as Richard wraps up his analysis. So tomorrow's going to be a great session, lots of action in store for you guys and gals. So be sure to join us again tomorrow. And it looks like we don't really have any questions coming through. So obviously we have our parting wisdom portion here, and then as well as the new trend has become our terrible joke of the day. So I think our parting wisdom is to join us again tomorrow. I'll just go ahead and throw that one out there. Parting wisdom, join us again tomorrow, noon Eastern, for the next session. And then really quickly, I'll hit our terrible joke of the day, for better or worse. And I'll tell you what I'll do. I'll give a chance because Harold did guess the correct answer to the joke on Monday. So I want to give you guys and gals a chance to fire off a response. I'll also drop this in the chat. Richard, what do you call a fake noodle?
No.
Thank you,
I have
Robbie.
no idea. A what?
A fake noodle.
No idea.
I'll give everybody here just a quick second to get the gears turning. What do you call a fake noodle? So I'll also type the answer when it comes through, just to
hit us.
Okay, well, the Jeopardy music's still playing. So, what do you call a fake noodle? An impasta.
Oh dear. Do you actually go Google these things before the show, or what?
I've actually had to. I've just started because, my limited repertoire, I've already kind of gotten most of the mileage out of that, and we'd have to test the waters as far as anything being above the PG rating.
I see.
So that certainly limits the pool as well. So you heard it here first, everyone. A fake noodle is called an impasta. Thank you so much again, everyone, for joining us. Thank you, Richard, for being with us again today. We'd love to see you all tomorrow, so be here tomorrow at noon Eastern time. I'll do a quick shout out. If you're joining us on YouTube, thank you, first of all, for joining this broadcast, but check the description for this video. There's a short link to get reminders and join us in these Zoom events for Profits at Noon. So if you're joining from YouTube, I very much encourage you to get in here, get in the Zoom. You'll get reminders before each of the sessions, as well as keeping you up to date on the long gestating newsletter that we hope to have updates soon that will accompany these sessions. So YouTube people, please join us in the Zoom, and everyone here in Zoom, you're in the best spot already. If you need to see a replay of any of these sessions, please please check out our YouTube. All of these sessions will be posted there after the fact. So again, thank you so much. Thank you for making another great Profits at Noon session. We will see you all again tomorrow, Thursday at noon Eastern time, and have a great day in the meantime. We'll see you again soon.
Thanks, everyone. Take care. See you tomorrow.
Bye-bye.